Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Messer and Tim Stenevec from Bloomberg Radio.
Apple lost its court fight over a $14.4 billion Irish tax bill. Google lost its challenge over a $2.6 billion fine for abusing its market power. It's a double boost to the EU's crackdown on big tech. The EU's Court of Justice in Luxembourg backed a landmark 2016 decision that Ireland broke state aid law by giving Apple an unfair advantage. The same court ruling that Google illegally leveraged its search engine dominance to give a higher ranking to its own product listings. Ed Ludlow's co-host of Bloomberg Technology on Bloomberg TV. He's got an EU law degree, so he's the perfect guy.
He's a European lawyer.
He's the perfect guy to talk to about this. He joins us from our San Francisco bureau. Okay, Ed, $14.4 billion. It's more money than $2.6 billion. But if we read between the lines here, which of these is a bigger impact for the respective company?
You know, joining you guys to talk about how shiny the new iPhone is a lot easier than this, but let's give it a go.
We'll get there, don't worry.
Look, in 2016, a European court ruled that basically Ireland as a country, but a member state of the European Union, had given Apple preferential tax incentives that were illegal under EU law. And Margrethe Vestager, the competition chief, in sort of landing this decision today, has come out on the right side of an argument she's made for a long time, which is that any member state of the EU cannot have an ad hoc beneficial or preferential tax arrangement with a country. What we're talking about is like where a country says to a tech company, come build with us, invest here, build offices, bring people, and in return you get these things, but the things you get are different to what everyone else gets. And so the money is eye-watering, but just really simply, it's been sat in an escrow account, gathering interest since that initial 2016 decision. All that happened was Apple had a right of appeal under EU law, which ultimately today they have lost.
Wow. So, yeah. I mean, this is interesting, of course, this tax case. There's also a lot of U.S. antitrust news that's going on, especially when it comes to Alphabet, the Google ad empire, et cetera. But with all of these things, I always wonder, how much does it actually matter for the company? I know that, Tim, you were getting at that a little bit, but we talk about these fines for these companies that have more money than a lot of countries proper, and then these antitrust trials, which just take years and years to play out. I mean, do investors really care about this?
I've always found it difficult to track the performance of the stock of a mega cap tech company against the headline about market competition or antitrust. You know, it's always been difficult to tell how sanguine or concerned investors are that a real antitrust action will result in a material impact to that business. Just today, D.A. Davidson, I think, put out or initiated coverage actually on Alphabet, the parent of Google, with a neutral recommendation. And a big part of that was, we feel that antitrust is a headwind to the core search business. So you've always got to take it into account. And I think you guys have had great conversations with Jen Rhee of Bloomberg Intelligence, that in each jurisdiction, what we're increasingly seeing is not just the action of a fine. So in this case, in Google today, they had to pay a fine, which to them is small amount of money in the grand scheme of things. But it's whether or not a regulator requires them to make a fundamental change to their business practice, and therefore whether it will change the fate of whatever that business is.
That's why it seems to me, Ed, if we read between the lines, the case about Google, which has a smaller fine than how much Apple has to pay, is a bigger deal, because it means Apple's got to pay more taxes. But for Google, this could be like a fundamental threat to the way it does business, at least with this product, right?
Well, I'd make one distinction, which is that mechanically Apple is paying back taxes, or it's paying taxes that it didn't pay in the first place, whereas this is an actual fine. And one interesting distinction, I guess, under EU law is that when an action is brought by the Commission and a fine is issued and then paid, often it goes into a pot of money that's then redistributed across the European Union member states based on complex formulas. So, they're both slaps on the wrist, but again, the biggest question that the street and markets are going to have for Google is EU a regulator on behalf of 440 million people, so an important market for Google, going to require them to change the practices that they currently use? And I don't know that we quite have the answer on many facets of Google's business, which you guys will know will also now include AI, because regulators are looking closely at the investments made by a number of tech companies in other AI companies.
I would imagine that they are. Well, let's tie this back to Apple, and let's tie this back to yesterday so we can pivot to talking about how shiny the iPhones are, because of course Apple knew that this was happening. They also knew that there was a presidential debate happening tonight, and that's part of the reason why, of course, we had the event, the big iPhone splash, happen yesterday, Ed.
It's likely. I mean, Bloomberg's reporting was originally that Glow time, the Apple event would be today, the 10th, and when I got the invite from Apple to my inbox, it was the 9th. And, I think sources had told us that was the consideration, right? That you have the presidential debate. And now we know that the EU tribunal was issuing this decision today, and that's now been and gone. I'd just add, finally, it's kind of unusual for Apple to do an event on a Monday. But they did, and I don't know what you guys would say. Katie has got a 6 or 7 generations old phone. She is the case study here of what happens next. Does Katie Greifeld now go up and upgrade her iPhone? That question's being asked world over.
It seems like Katie's not interested in the AI stuff. You just want to know what's best for posting to Twitter.
Yeah, pretty much. I want to be able to tweet. If I could actually think and it tweeted for me, that would be great.
You just need a posting phone.
Yeah, exactly. I will say I'm not going to buy an Android, though. I will eventually get a new iPhone. So that network effect that we were talking about with Mark Gurman, it's real.
Yeah, no question it's real. I think also one thing that I want to go back to, Ed, that you saw close up and firsthand yesterday is Apple's dive into health. And the company for years has been making its pitch to consumers that it's safe with your data, that your data remains private on the iPhone. And it, for years, has been going further and further into health. Talk to us a little bit about what Apple could do to disrupt the healthcare space. I mean, this has been more than a decade-long promise.
Yeah, I mean, the 2 technology updates are sleep apnea through the Apple Watch, which starts with Series 10, but is not exclusive to it, and hearing aid technology through AirPods. Both of them are pending FDA approval, but I mean, Apple in a presentation publicly said that FDA approval is close, and you would wager that they wouldn't say that were they not confident. And it's interesting because sleep apnea, this is something that, of course, Bloomberg's Mark Gurman had reported, but it's kind of logical with the watch. The more interesting one is probably the hearing aid technology. Yeah. I don't know if you guys kind of track the markets, but some hearing aid stocks fell because they take the competition from Apple seriously. Though the mechanism, the modus operandi through AirPods is very different to a discrete hearing aid. And the story that Apple's trying to tell is holistic, like you point out, Tim. We're super good with privacy and data, but we're also about, you're going to use this anyway, so use it for something that's beneficial to you.
Yeah, that's interesting. Of course, we were talking about that. And talking about the notion of people just keeping it in and talking to you. So we'll see. To your point, Ed, I mean, it's a good one that other companies, investors in other companies, are taking the threat seriously when it comes to sort of the ambitions there when it comes to hearing aids. Talk to us about the watches, too. I mean, I care about the watches, not because I'm ever going to switch from a Garmin, but we did get some details on what the next iteration of watches there, what the next evolution in the watch story might look like.
Yeah, it's always interesting, 24 hours after the fact, of what people are talking about. And I see on social media, even from Mark Gurman, a sort of rethink on the watches. They're a really important part of Apple's strategy, right? Because you're not necessarily going to spend $1,000 on a phone. You might find, $400 more palatable on a smartwatch that has fitness, sport, water sport, and health data for you. But it also goes to the other thing that we were kind of joking about yesterday, but it's seriously important in markets like China, that the Apple Watch hasn't had a refresh since 2022, really. And it's aspirational to have an Apple product. And in the case of the watch, it's like a piece of jewelry. And they really emphasize the materials. You can get yourself an Hermes wrist strap, but that is actually, of substance to a lot of buyers in a lot of different markets.
And it's core to the DNA of the watch. Remember that first generation Apple Watch it was about a decade ago? There was like that $14,000 gold version.
Right.
It's like essentially...
You're talking from experience?
No,
because that's not something that adorned my wrist.
Yeah, and
one thing I would say, though...
it didn't adorn my wrist either, but my first thought when that came out was like, this thing's going to be obsolete in a year. I can't believe anyone would buy such a thing.
One thing I'm going to look into, though, that I find really interesting is when the smartphone comes out, everyone goes, oh, well, I'm on T-Mobile or I'm on Verizon and they'll give me a deal and I'll upgrade or I won't. But remember, in the United States in particular, there are lots of health insurers that will subsidize you buying a piece of health or fitness equipment.
Yeah.
And I'm really interested to see how that works this time around. People are basically post-pandemic so concerned with data about their well-being. And you do wonder if that's going to be a big driver or an upgrade cycle on the wearables side.
Hey, Ed, before we let you go, just in the last 40 seconds we have with you, now that we are 24 hours out from that event, what are the analysts saying? What are their notes saying in general?
Everyone is so bullish. I
Really?
mean, you guys probably get Dan Ives' emails in your inbox from Wedbush. The super cycle's coming if you believe the sell side. And I think part of that is irrespective of whether Apple Intelligence is here now, it will come eventually. So buy yourself a new handset in the anticipation it will come.
Ed Ludlow, co-host of Bloomberg Technology on Bloomberg TV, also has a degree in European Union law, so the perfect guy to talk to for everything tech and, of course, antitrust and regulatory from the EU as well. He joins us from our San Francisco bureau.
This is Bloomberg Businessweek with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Businessweek. That's Katie Greifeld in for Carol Massar this afternoon. I'm Tim Stenivek. Katie, when we talk about recessions, we often talk about economic recessions, okay? The National Bureau of Economic Research defines them as, quote, a significant decline in economic activity that's spread across the economy and lasts more than a few months.
Yeah.
Okay. What about a dating recession?
A love recession, if you will.
Well, we bring that up because a new Stanford University study, along with recent government survey data, bolster the conclusion that COVID not only sparked this economic recession, but also a recession in Americans' social lives, and it lingers years after most U.S. adults were vaccinated. For millions, dating and other social activity never recovered, with effects that aren't just personal and psychological, but economic and perhaps even political. We got Ben Steverman with us. He writes for Bloomberg Businessweek all about this type of recession. He's Bloomberg News wealth reporter, and he joins us here in the studio. So what exactly is the definition of a dating recession?
Well, this is a term that comes out of research from Stanford University, and it looks at informal relationships. So, we actually have pretty good data that marriages pretty much held up during COVID. If you were living with someone and you liked them, you tended to survive the pandemic. But we didn't have really good data on these people, informal dating. So maybe that's somebody you see once a week, or these short-term relationships that go on for 3 months. And, we all know these sort of serial daters. You jump from relationship to relationship. This survey was conducted in 2017. Then this researcher did it again in 2020 and 2022. And what he found was that basically he estimates there are 13 million more single people now than there were before the recession. So that's like 1 in 5 U.S. adults. And it was very concentrated among young people, which you would expect. They're the people who are dating. And so I had that piece of data from this new study, but then I also went and analyzed the American Time Use Survey. And it's another way of getting at informal social lives and seeing what's happened to social lives over time. And actually what I found there was more disturbing. Basically, the Bureau of Labor Statistics asked people to track their days. And what we see is that face-to-face socializing has declined a lot, which is maybe not surprising that it declined a lot during the pandemic when we were all stuck at home. But the thing is, it hasn't recovered. So you would expect, the economy has bounced back from COVID. You would expect that it's face-to-face socializing would have as well. But it's really kind of stuck. We're kind of stuck basically where we were in 2021, which is the deadliest year of COVID. This is based on 2023 data. So let's hope things are coming back even more this year. But what I tried to do is then think about what is the long-term consequences for some of these trends, and maybe what are some of the psychological and even health effects that this might have.
Well, I wonder, we were talking about this a little bit in the commercial break, how much of this is demographics, because it seems like Gen Z is dating less, they don't go out as much, but I guess that wraps into, of course, a lot of them were really coming into full-fledged adulthood during the pandemic, so maybe those two are impossible to separate. But talk to us about the potential economic ramifications here.
So these informal relationships we have, I mean, obviously, social life is just important for your mental health and lots of other things too. But these informal relationships, they're the first steps that you need to move in together, get married, have kids, buy homes together. All these things are all have been delayed over the, like if you look at way before the pandemic, you look at which milestones 30-year-olds are hitting. We keep hitting those milestones later and later in life.
Yeah.
Of buying homes and
the question though that I would have is,
and so
and
it's going to continue.
You can't measure this. Would this have happened without the pandemic?
I think the long-term trend suggests that this kind of both the hitting the benchmarks later and just the social decline of community, decline of social connection, those are long-term trends that were happening before COVID.
Yeah.
But COVID seems to have really accelerated them. And then you raise the question about young people and how they're different. Well, what if you're a young person and you've never learned those social skills? You never learned those, like the ability to kind of break out of your shell and put yourself in new environments, whether it's a dance floor or, I'm obsessed with nightlife, so I was talking about nightlife. But what if you've never learned to do that? You don't even know what you're missing. So I think that it's possible something profound has shifted in our culture, and I actually see some signs. This is a little depressing, but I see some signs of optimism in that there might be a little bit of a backlash to that happening now. So the other thing I see in the time use survey data is that people are attending and hosting social events just a little bit more.
Okay.
So that's the one piece of social activity that seems to be coming back. We're still spending a lot of time with our phones, a lot of time with computers, but people are hosting parties and going to parties more. So it seems like we're trying. And at least some people are trying to get out there more. It's
a good optimism to end on. Ben Steverman is a Bloomberg News wealth reporter. Check out his story. You can read it on the Bloomberg Terminal and at Bloomberg.com. He writes all about this dating recession for Bloomberg Businessweek.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Affording a new set of wheels right off the lot has become increasingly difficult in recent years. What do you think the average new car buyer in the U.S. paid in July?
I have no idea, Tim. I was hoping that you would tell me.
Close to $50,000, $48,401 for a car.
Yeah.
Yeah. That's according to the Kelley Blue Book. One painful result is that average payments for buyers of new cars in the U.S. rose to $735 a month in the first quarter of the year. That's according to Experian. But if you lease it, the average monthly lease payment for new vehicles fell to $595. And some EVs can be had for even less, some for a lot less. Keith Laing is Bloomberg News Automotive Regulations reporter. He joins us from our Washington, D.C. bureau. It's almost too good to be true, Keith, the headline on your story about a $20 per month lease for an EV. We got to start there. Where did this happen?
So it was a deal we confirmed at a dealership in Colorado. It actually came to our attention because Chris Hilbert, who was one of the potential car buyers I quoted in the story, had mentioned it, and researching online, I saw it had been going viral. So I contacted the dealership, and they confirmed that it was true. That was their offer in July, and even in August, they had like a $20 deal, and then if you hadn't mentioned the article that was written that helped that deal go viral, then your deal was $25. And then even in August, they confirmed they were offering the Nissan Leafs for as low as $65 a month.
Wow, is this because nobody wants EVs? Is that why?
Well, there's debatable about the level of interest in EVs, but in speaking to car dealers for this story and others, there's a lot of inventory that has been on car lots that car dealers are incentivized to move, and their manufacturers are providing extra incentives for them to move. And there are, in the case of leases, there are EVs that no longer qualify for federal tax credits because of new rules that were enacted by Congress in the 2022 Inflation Reduction Act, which placed limits on where the cars are built, where their batteries are from, where the minerals are from, the price of the car, even the income of the car buyer, and all those limits apply to purchases. But leases are considered commercial vehicles, and none of those limits apply to those. So the manufacturers then get the credit themselves, bundle it with other incentives to offer good deals on cars they really want to move from their lots.
Something that I've been wondering when it comes to EVs, I mean, Tim made reference to the demand kind of not being there, maybe not in the way that a lot of these automakers had expected it. But from the buyer's perspective, there's a lot of question marks over the resale value of an EV, especially as battery technology continues to develop. I mean, is it possible that people might be more inclined to lease an EV, especially at some of these low monthly payments that you write about, versus buy one and take the resale risk?
Yeah, that's definitely an advantage that people have raised about leasing, that the technology has changed so much even in the last couple of years that you kind of just don't have the risk of having this car which could have different charging technology in 5 or 10 years. So people that have been in the market for leases have cited that as an advantage, and the types of deals that are out there that it's really hard to match on traditional cars at this point.
So I guess the question that I have is what demand looks like moving forward, Keith, because if we were talking a couple years ago, everybody would be thinking EVs 100% would be the way to go. But I think it was just last week we learned from Volvo that they're sort of ditching their timeline. Ford is completely throwing their timeline out the window here. What's the timeline for a transition to EVs? Is that something that you think will even happen?
Well, it was at the beginning of the Biden administration, all the car makers were at the White House, and there was this big...
Except for Tesla, right?
Except for Tesla.
Yeah,
that's true.
There's a lot of history. There's a lot of history.
Yeah, there's a lot of history there. But the other major automakers were all at the White House, and there was a big pronouncement that we were going to have 50% EVs by 2030 or zero emission cars by 2030. The pace of EV adoption probably doesn't get us there currently. EVs were just under 10% of the market in 2023. We'll see where they land in 2024. Leasing is a rare bright spot. EV leasing was 32% for EVs in the first quarter of this year, and it was 11%, I believe, for regular cars. So leasing has been a bright spot. And it could be the case that, leasing allows people who are kind of skeptical about the technology to try it for a few years and decide if it's for them. So it remains to be seen whether we get to the types of numbers that were talked about in that White House event. But the car makers have not said that they're going to stop making EVs completely, and if for no other reason, then they want to sell cars in China.
This isn't really a question so much as a comment, but in defense
I'll allow it.
Of leasing, I mean, I like to lease cars, Keith, simply because I like getting a new car every couple of years. I like to try out different models.
You live in New York City.
I know, but I have a car. I
know.
have to drive, get to the horses, etc. I don't know. Maybe that's a factor. That's my comment. It's not a question, Keith. I don't know if you want to do anything with it.
Well, yeah, leasing has its fans. It is a it just depends on whether it makes sense for the type of factors you mentioned. It's a practicality consideration, and that's what we're finding. A lot of people are basing their consideration of EVs on. There are people, I talked to people for this story who were buying their second or third EV, and there are some people that say they don't trust the charging and they do a lot of long distance trips and don't want to.
Sorry, go ahead, Keith.
No, it just kind of comes down to each individual car buyer, whether leasing makes sense for you or not. And in some cases, I talked to a gentleman for this story who leased a Kia Niro, and he said he got a deal where he was paying $307 a month, and he started out trying to buy a Kia Niro, and the lease deal was just so good he couldn't pass it up. He said, you can't get anything for $300 a month these days.
We only have like 20 seconds left, but could it be better for some people to lease because there are concerns about battery life and battery degradation?
Yes, because you can. In that case, you could lease for as short as 2 or 3 years. You're not stuck with a car throughout in the years where you could have those type of problems if that's something you're concerned about.
Keith Laing, Bloomberg News automotive regulations reporter, joining us from our Washington, D.C. bureau. You can read his story about that $20 a month lease for that EV out there in Colorado at Bloomberg.com and on the Bloomberg terminal.
You know, you have a car too.
I do, yeah.
You're
it's
in
not
New
an
York
EV.
City, man. No.
I know.
Can't do that. Range anxiety.
I drive the car every week to park it.
Oh.
That's like, it's really terrible.
You shuffle it around?
Shuffle it around. That's the life of a New Yorker
Keep
with a
it
car.
fresh.
You're listening and watching Bloomberg Businessweek. That's Katie Greifeld. I'm Tim Stenevec, and this is Bloomberg.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, let's talk academics, because the gap between women and men in leadership roles at U.S. business schools has been shrinking, especially as more women are promoted to positions that are stepping stones to deanships. We've got some numbers here. In 2023 to 2024, women deans at 368 U.S. business schools represented 30% of the total. That's according to research by the Association to Advanced Collegiate Schools of Business. It's an increase from 17% back in 2007 to 2008. What's more, the AACSB found, women now account for 43% of associate business school deans. It's a position that often leads to a deanship. 34% currently in that role were once associate B school deans. For more, we've got a great roundtable. Dimitra Kessenides, she's Bloomberg News senior editor, and we've got Wen Mao with us. She's dean of the Villanova School of Business. They both join us here in the Bloomberg Interactive Brokers studio. Dimitra, I want to start with you, and I want you to set the scene for us, because each year you spend a lot of time focusing on business schools for Bloomberg Businessweek. Take us into the gender gap when it comes to leadership at these schools.
Well, it's just like the numbers that you just mentioned. I mean, there's been a substantial gender gap, but we see it narrowing, and importantly so. I think you see it to some degree, in a way, with our guest today, with Dean Mao of Villanova, women who've been at these institutions for a while, who've been growing in different positions and moving their way up. And as we see more and more of those women sort of stepping into these associate deanships, you know, they're primed for taking on these roles. I think it's just the generation and the time that we're in, that it's all kind of coming together. There's still a gap. And even I think there's still a bit of a gap. I'm looking it up now, and I'll know that in a minute when I put my finger on it, when it comes to salary and some other differences. But it is meaningful. It's meaningful in many ways. It's as we reported in our story, Dean Mao was one of several deans that we reported on, to the women in that institution in various roles, to the women who go to those institutions and study. Representation, as we know, matters. And I think it's a very meaningful change also, just given the way that these institutions are led. There are differences, and so I think that it's something that we're gonna be happy to keep tracking in various ways.
Well, Dean Mao, come in on that point. Of course, you're dean of the Villanova School of Business. I actually went to school at Haverford, just 2 miles down the road. But you've been with Villanova in various roles since 1996, I believe. So what was the path to finally becoming dean of the business school?
Oh, it's pretty much my entire career. Mm-hmm. So I started as an assistant professor in the economics department, really 1 year out of the graduate program, and then became tenured at the business school, and then took on the department chair role, only because my colleagues wanted to hear me call Chairman Mao. So they waited. They said they waited for 10 years for that to happen. When it finally happened, they're like, yeah, we want her. I never actually wanted, because in academia, I think what drew us to this profession, at least most of us, I try not to overly generalize, is the degree of freedom. You don't really have a boss. I mean, department chair really isn't a boss. It's really, everybody is your boss. And also, like, you're really not drawn to the salary, right? And so it's really that freedom, it's that purpose, it's that working with young people and research, right? Those are the things that draw you there. So being an administrator isn't in most people's plan. So, but yeah, go
Dean
ahead.
Mao, I'm curious how the makeup of the school is representative or is not representative from a gender perspective of the actual administration.
In terms of the deans, or
in terms of the deans. For example, and I can only draw on my own experience, but when my dad went to business school in the 70s, it was almost all men.
Mm-hmm.
When I went to business school, 8 or 10 years ago, it was like 50-50.
Mm-hmm.
But it didn't seem like the administration was 50-50 gender-wise.
So if you count department chairs and then deans and associate deans, right now, say out of the 5 department chairs, we only have 1 female, and she's actually the finance department chair, which has 60% of our students.
Wow.
So a very, very important job, and she's done a fantastic job at that. In terms of the dean's job, let's just zoom out a little bit. For the whole university, we have 6 colleges, right? So 6 deans, 5 are female. At Villanova. So that's impressive. But if you think about history, right, Dimitra is right that we have come a long way. It didn't just happen overnight. I'm looking at the hallway and see all the prior business school deans' pictures, and I think I'm the 2nd female.
Wow.
The previous dean was the first female dean in Joyce Russell, and then prior to that, all male and mostly priests.
Wow.
I guess that makes sense.
So that right, and so yeah.
This is a Jesuit school.
Yeah.
So it's certainly come a long way. But right now, for instance, I have 2 senior associate deans and 1 male, 1 female.
All right.
So yeah.
So there you go, and that's the Villanova makeup there. And you mentioned that it's not something that you necessarily get into for the salary, but Dimitra, I want to come to you on that point. I mean, you think about the data that you have, and what does that show when it comes to the salaries?
Yeah, well, I mean, we've collected data. Again, it's from AACSB, the association that Tim mentioned, and there's still a gap. I mean, the gap in salary has been somewhat consistent. It feels like over the last 5 to 8 years, which is about women lagging men in the dean's role 5 to 6% in salary. So, if you're looking at, say, an average salary for male deans today of about $326,000 versus for females of $314,000.
There's not a huge disparity there, but there's still a disparity.
It's not huge, but it's a disparity. And these are people, again, coming up through the ranks, long time with the institution, holding important roles. Sometimes you just scratch your head and wonder why there is a disparity at all still.
Hold on, why is college and graduate school so expensive? What are the salaries?
Well, those they are big salaries, but they're big jobs, maybe? I don't know, Dean Mao.
In terms of the cost, it's very interesting you asked that. I think inflation adjusted, economist here, so confession.
Please.
It didn't go up as much as the sort of headline price tag says, because you also have scholarships, right? And so the net cost of attending actually in recent years have gone down, did not go up. So that's, but if you see the price tag, it's like you go to the car dealership. No one actually pays that tag price, right? You kind of have discounts. And so most universities give out discounts based on needs.
Right.
And because that information is very hard to obtain, so there isn't a transparency to how much the actual cost is for the students. So most universities, believe it or not, are being pressed, squeezed, right? On one hand, you're giving all these discounts, so you're not bringing in as much tuition. And on the other hand, you have the rising costs with faculty salary and all that. Yeah.
we only have a couple minutes left, and I want to get into some of the challenges that schools are facing right now. The effect of the Supreme Court decision back in the summer of 2023 that bans affirmative action. How's this playing out at Villanova and at the business school?
Actually, we have not finalized the numbers for this year yet, but preliminary data seem to suggest the numbers pretty much stabilized, so it didn't have a big impact for a school like us. And maybe partly because we still have very strong outreach, and also, if you think about it, MIT, I think, came out and said,
that was the
they
big
came out
story.
and said that was a big story. The number did go down for them, right? And I was thinking, like, just a few days ago, well, that has to have impact on the school right below, right? So these students go somewhere. Where do they go, right? Could they be coming to some school like us? And maybe that has an impact on sort of the next tier schools, and then it trickles down to the following tier. So that's maybe just a sort of an educated guess. And for us, maybe it's a wash.
Dimitra, we only have a little less than a minute, but as I mentioned, you spend a very good part of your year focused on the business schools. I'm not going to give anything away because I don't know anything, but I know this time of year is when the rankings usually come out. Can you give us any preview of sort of how you're thinking about things this year? Just very briefly.
I mean, we've been talking to deans at several schools, and going out there and taking a look at what's happening. The rankings come out next week, by the way, September
Mark your calendars.
17th. They will publish at 12:01 a.m. These are global rankings. A lot of the themes we've been seeing in recent years are picking up and just taking on greater importance. The AI, the theme of AI in both how it's being used in the classroom, how it's affecting so many aspects of the education, and also in the jobs that the graduates are seeking. And then jobs is a big one this year.
Okay.
It's been a challenging year for MBA grads. And
All right,
jobs.
well, we know
that has continued.
We know we'll get you back on as soon as that list does come out. Dimitra Kessenides, Bloomberg News Senior Editor, Wen Mao, Dean of the Villanova School of Business, here in the studio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
Would you look at the time, Katie?
Oh my God.
What do you see?
3:42.
3:42.
Could it be true that we're only 18 minutes away from the closing bell?
I think that is true.
Wow.
I think it's fair to say. How are markets looking? We just heard from Charlie.
It's
What are you thinking?
okay. Again, we're not quite in we're so back territory, but the S&P 500, it's up 3.4%. Can't really complain there. You take a look at the NASDAQ 100 right now, your big tech names, we're up 0.9%. So some nice follow through on what we saw yesterday following an absolutely punishing week last week.
Testing. It works?
It does.
It works. Okay.
Yeah.
Mic is on.
There you go.
I want to see what Amanda Agati has to say about this. She's Chief Investment Officer at PNC Asset Management Group. Amanda, I want to talk about the S word, seasonality, because September seasonality is something that we were reminded of last week with that huge decline in the well, I guess it's fair to say everything. Yeah, I was going to say the stocks, but how are you thinking about this, Amanda?
Well, it's great to be with you both. I would just simply say it's a sign of the times. And yes, that is a Harry Styles reference for you.
There it is.
We're hunkering down here for what we think is, likely to be a pretty seasonally average yet challenging environment for investors. September is a tough month, and we started off from a very tough perspective. I think it's really a function, though, of there's a lot of news and a lot of data points yet to come here. Investors have had it really easy for the better part of the year up to this point. We're sitting at price to perfection equity levels. There's just not a lot of headroom to absorb, potentially some negative data points here. So things are getting choppy, and I think it's right on cue with the sign of the times.
I'm trying to think frantically of another Harry Styles reference, and all I have to say is "As It Was" is a good song.
That's a great song.
Yeah, right?
Yeah.
It was my COVID song. I listened to it a lot while I had COVID the first time. Anyway, Amanda, I'm going to ask you a question that I asked one of our guests on the morning show, and that is, you think about just the cadence of this week. Of course, tonight we have the presidential debate between Kamala Harris and Donald Trump, potentially the only debate between the two this cycle. And then we have, of course, CPI coming out tomorrow morning. What do you think is more important for markets at this juncture? What will you be paying more attention to?
Well, I think CPI is certainly much more important than the debate tonight. I'm not sure that we're really going to get a lot of hard-hitting market intel that's necessarily going to drive markets forward here based on what we hear tonight. Obviously, policy differentials on either side of the aisle are going to matter going forward, but I don't think there's going to be enough clarity tonight to move markets materially. CPI is obviously a critically important one. It's a key input into what the Fed might ultimately do, but I'm not sure the investors are really even that focused on CPI. I think they're craving the watermelon sugar high from a rate cut coming next week. So I think that's probably really much more where the markets and investors' minds are.
You're on fire. You're just putting me to shame.
That's how she rolls.
I can't think of a single reference right now.
It's just luck today.
I am really interested that you said that you're more focused on CPI, because I asked Katrina Dudley that question this morning, and she's actually more interested in the debate from sort of the investment perspective to see actually how similar their policies are when it comes to, you know, some of the economic proposals. Of course, there is a lot of distance when it comes to other issues. But, I mean, how much as a medium long-term investor do you pay attention to their policies? Of course, we talk about the Trump trade, the Harris trade all the time, but what does the Trump investment look like versus the Harris investment, if that makes sense?
Well, I feel like it's a little bit early to say. I mean, we can lean on sort of the traditional policy stands for the Republican Party and certainly for the Democrats, but I don't know that we have enough information, even at this late stage of the election cycle, to know for sure what the nuances and differences are. I mean, I think the debate will be very interesting. It's always entertaining to watch how these things play out. But from our perspective, what matters more is the makeup of control in Washington. And so we're not going to know that as a function of tonight. There's a lot of seats up for grabs. And so, you know, it's not going to be until we really get to the election itself where we have, you know, a lot more clarity around what policies might actually get implemented or not. Markets always prefer gridlock. Markets always prefer not a lot of policy change. And so I think that's the best kind of scenario. Gridlock for the markets. But the if I had to point to one thing that I care about more than anything else from a policy stance, it's what happens to corporate tax rates. And so if we get some intel on that tonight, that'll be great. But I think there's a lot more to come on that topic.
Do you think, apart from the makeup of Congress and the presidency, the idea that gridlock is good for investors, how do you characterize election risk?
We don't tend to focus on it as material news, which sounds like a crazy thing to say. But I think from a market perspective, it's actually noise. It creates a lot of noise. It creates a lot of short-term volatility. But we do not position portfolios around binary outcomes. And this is really one of those where it's one way or the other. And so, you know, we're trying to position portfolios so that they have ballast, because this volatility story is very much picking up again. But going into the election, we're also very well diversified and very focused on quality, because it is at this point anybody's guess in terms of what the policies are ultimately going to look like. So that's sort of our defensive, offensive playbook at the moment going into the election.
Well, a minute left. What does quality mean in that environment? What are the characteristics of a quality company? And is that just big tech? Because that has been the definition for a while.
I don't know any Harry Styles songs, but there was no reference in there to Harry Styles.
No,
right?
he has a song.
I don't know. I've used up all my
I've
used up all my references, so I can't give you another one there. But from a quality perspective, we're definitely focused on high recurring revenue bases, strong defendable margins. We're in a margin compression environment now, so those who have the ability to pull levers to defend margins, we view as very much quality. Throwing off a ton of cash, low debt burdens, low leverage. Those are kind of the key characteristics around quality. Certainly some of the big tech names fit that, but there's a lot more diverse options out there than just big tech.
Amanda Agati, always bringing the references. The song of the season. You guys do the song. You do the song of the season or something, right, Amanda? Is that what it is?
We do every year. I have a Rolling Stones T-shirt on. You can't quite see it today, but our song of the year for this year was "I Can't Get No Satisfaction"
That's right.
by the Rolling Stones.
Do you have it? 10 seconds. Do you have it picked out for next year yet?
No, oh my gosh. And if I did, I would not reveal it yet. You'll have to have me back closer to the end of the year.
Hey, we're going to have you back closer to the end of the year, of course, because you do the 12, is it the 12 days of Christmas?
There are 12 days.
Yeah.
For Christmas.
Yeah. We always get Amanda Agati around Christmas, Chief Investment Officer at PNC Asset Management Group, joining us from Pennsylvania.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.